Welcome to Breaking News to Trading Moves.
Glad to be here.
So, for you listening today, our mission is pretty straightforward. We are going to look at a recent headline regarding Rivian, and then we're just going to identify the specific winners and losers in the market.
Right, exactly.
No exaggerations, no hype. We're just looking at the data and what it actually means.
Which is really what you need right now.
Yeah. So let's get right into the headline. Rivian Automotive beat their Q1 delivery expectations.
They did, yeah. To just lay out the numbers calmly, Rivian delivered 10,365 vehicles.
Okay.
And that directly beat Wall Street's estimate, which was sitting at 9,678.
Got it.
Plus, they also reiterated their full-year forecast, so they remain on track for, that 62,000 to 67,000 vehicle range.
Which is, it's a beat, right?
Mm-hmm.
But I guess the question for you, the listener, is, and this is my pushback, does one quarter mean the demand is actually stabilizing? Or is it just, a temporary floor?
Well, it's really about those numbers suggesting that EV demand may finally be finding a floor after a really tough period.
Right.
When you establish that kind of floor, it adjusts the sentiment across the broader market. It tells investors that, hey, the continuous decline scenario might be a bit too pessimistic.
Yeah, that makes sense.
Yeah.
It gives a confidence boost for the whole category.
Exactly.
So if one company proves demand exists, let's look at the direct beneficiaries. Who are the first winners here?
The first group of winners would definitely be the major U.S.-listed EV manufacturers.
Okay, so the direct competitors.
Right. Because if investors believe demand is finding a floor, the overall sentiment improves. The main ticker to mention is obviously RIVN for Rivian.
Naturally.
But then you also look at TSLA for Tesla.
Wait, really? Because, Tesla had a pretty weak delivery report recently. Why does a Rivian beat help them?
It sounds counterintuitive, I know, but Tesla benefits from that overall demand floor.
How so?
Because if the market leader shows weakness, Wall Street assumes nobody wants electric cars anymore. But Rivian's numbers prove consumers are still buying. So Tesla's weaker report looks more like a company-specific issue rather than a total collapse of the category. And pair that with higher petrol prices putting pressure on consumers, and the broader category retains support.
Okay, so that's the actual vehicle makers.
Yeah.
But let's look at the broader ecosystem. It's kind of like selling pickaxes during a gold rush.
That is a great way to look at it.
If more EVs are being produced, the companies supplying the materials and the fuel, which is electricity in this case, they have to win too.
They absolutely do. When we talk about suppliers, a key one is battery material producers.
Like the lithium companies.
Exactly. So you look at a company like Albemarle, ticker ALB.
ALB, right?
They benefit heavily from expectations of steadier production volumes. If Rivian is hitting targets, Albemarle can actually model out predictable consumption of lithium for those batteries.
Because they know the hardware is actively being built.
Right. And then for the fuel side of your pickaxe analogy, you have the charging infrastructure.
The physical stations.
Yeah, companies like ChargePoint, ticker CH-PT, their whole model relies on utilization rates.
Like how often a car actually plugs into the thing.
Exactly. 10,000 new Rivians on the road means higher long-term adoption, which means more daily users for those commercial charging networks.
That makes perfect sense.
Yeah.
So CHPT and ALB are solid winners there.
Yes.
But, vehicles aren't just sold to individual drivers anymore, which is something I think people forget.
Oh, absolutely.
There's this whole secondary market for fleet deployment that, it changes the math entirely.
It really does. And that brings us to the ride-hailing and autonomous plays.
Right.
Because Rivian has a longer-term tie-up with Uber. And that provides a growth angle that's entirely separate from just, selling a truck to a retail customer.
So how does that change the lens through which investors view these stocks?
It basically brings future autonomous mobility and fleet deployment right into the current conversation.
Like the robotaxi potential.
Exactly. It brings renewed attention to that whole theme. So this really benefits specific tech and ride-hailing companies.
Give me the tickers for those.
You're looking at UBER for Uber.
Okay.
And GOGL for Alphabet, since they operate Waymo. They need reliable partners to build the actual electric chassis for their software.
And Rivian proving they can hit manufacturing targets makes them a viable partner.
Spot on. It removes some of the risk from that hardware bottleneck.
Okay, so we've covered the winners.
Yeah.
But logically, if Rivian is proving resilient and gaining adoption, that market share has to come from somewhere, right?
It always does.
So let's talk about the losers. Where does that pain land first?
The first group of losers would be the traditional legacy automakers.
The old guard.
Right. A stronger Rivian just increases competitive pressure on them. Investors start to worry that Rivian's resilience makes it much harder for traditional manufacturers to win back momentum in the EV market.
Because they're trying to pivot.
Yeah, they're managing this really brutal transition from gas to electric.
What are the tickers to watch there?
You'd be looking at F for Ford and GM for General Motors. Every truck Rivian sells is an opportunity Ford or GM just lost.
Wow, yeah. And earlier we talked about high petrol prices helping EV demand.
We did.
So the flip side of that is it has to hurt the businesses reliant on petrol, right?
Absolutely. The petrol-sensitive names take a hit here. As higher petrol prices push consumers toward electric vehicles, the businesses tied to long-term petrol demand face a much weaker sentiment backdrop.
Because people are just buying less gas.
Exactly. So the tickers to note here are MPC for Marathon Petroleum.
Okay.
And VLO for Valero.
So these are the refiners?
Right, the companies that actually make the fuel. If a chunk of the population permanently transitions to electric, that is permanent demand destruction for their product.
Yeah, that's tough math for them.
Yeah.
But just because you make an EV doesn't mean you automatically win either, right?
Not at all.
Because the market doesn't reward everyone equally just because demand might be stabilizing.
No, actually, better than expected updates from one company make the market more selective, not less.
Oh, really?
Yeah, investors shift their attention toward the companies proving demand resilience, like Rivian, and they pull away from the weaker EV sentiment names.
The ones that are still struggling?
Right, the companies that still face execution concerns or have lingering demand questions or just generally weaker delivery momentum.
So they drain capital out of the laggards and put it into the proven winner.
Exactly. The tickers to mention here that face pressure are LCID for Lucid and FSR for Fisker.
Got it. So if Rivian can hit their numbers, the macro excuse kind of vanishes for Lucid and Fisker.
Completely. You can't blame the economy if your direct competitor is making their targets.
Okay, so to quickly recap what we've covered for you listening today, we have this clear division from a single delivery beat.
Very clear.
Our winners are the ones with momentum, so Rivian and Tesla. The infrastructure plays, meaning Albemarle and ChargePoint.
Right.
And the fleet tech ecosystem, which is Uber and Alphabet.
Spot.
Then on the loser side, we've got legacy auto, so Ford and GM. The gas companies like Marathon Petroleum and Valero.
Yeah.
And the struggling EV peers, specifically Lucid and Fisker.
That sums it up perfectly.
It's pretty wild how one data point categorizes the entire market like that.
It really is. And I'll actually leave you, the listener, with a final thought to ponder on your own.
Oh, let's hear it.
We talked about how consumer pain at the gas pump is one of the primary mechanisms providing a floor for EV demand right now.
Right.
So what happens to this entire ecosystem if petrol prices suddenly drop?
That is definitely something to think about. As a reminder, this is not financial advice or buy or sell recommendations. This is purely the opinion of the author.